In the last 3 hours, and I mean literally in the last 3 hours, $650 billion was added to the precious metals market. Gold shot up 1.3%. Silver, 3.82%. And this is not some random market noise. This is a direct reaction to what's happening right now between the US and Iran. Something is going to happen very soon. They've moved lots of, obviously we know the assets that they moved. There's people that are moving out. And the more you hear about what the US is asking from Iran, which is basically don't be Iran anymore, you have to understand that these people are building the bomb, not so much because they want to use it, but they make billions of dollars building this thing for themselves. And the US wants to take that out away from them. I don't think that's going to work. They want to stop being who they are. No way. If you do not have a position in gold or silver right now, do not panic. We are going to break all of this down step by step. And if you do have a position, we are going to want to know what the chart is actually telling you what to do next. Since you're my members, you know exactly what I have and what I've done, what I'm waiting for. Anyway, we'll see what happens over the weekend and next week. But so far, everything is looking pretty good. Okay, so let me first of all give you a full picture of what actually happened, because the numbers alone don't tell the whole story. So gold added $470 billion to its total market cap in 3 hours. Silver added $190 billion. Together, that is $650 billion flooding into precious metals in essentially the blink of an eye in market terms. Why does this happen? Why do people run to gold and silver when there is geopolitical tension? Here is the simple version. And this is important to understand because this pattern repeats itself over and over in history. When people get scared, whether it is a war, economic collapse, political instability, whatever it is, they stop trusting paper money. They stop trusting stocks and they move their wealth into something that has been considered valuable for thousands of years. Take a look at the previous video that I've released on gold, or that I'm going to release. But anyway, by the time you get this, everything will be together. But basically, you're going to see what happens over time, what happened during the World War I and World War II, and during those in the 70s, what happened. And you understand the pattern. Gold and silver are what we call safe haven assets. They are not tied to any one government. They cannot be printed out of thin air. They are physical and limited in supply, and universally recognized as stores of value across every single culture in the planet. So when the US-Iran situation starts heating up, and right now it is heating up, smart money starts moving. And today we watch it happen in real time. The move was fast, it was large, and it happened in 3 hours. That is what we call a sharp catalyst-driven move. This is not a slow grind upward. This is the market reacting emotionally to fear. And that is actually one of the most important concepts I want you to walk away understanding today. Fear drives gold up faster than almost anything else. And right now, there is a lot of fear in the market. Before I keep going, and I promise you we're going to get deep into this chart, I want to take a moment to talk to you directly. If you are new, welcome. This channel is where I break down real market moves. No gatekeeping. If you find value in this type of content, go ahead and hit that subscribe button right now. And also make sure that you put the like. If you want to go even deeper, if you want to know what I'm doing, what's going on in the background, if you want to go inside my actual portfolio, what I'm building, the decision I'm making in real time, the assets I'm watching, the moves I'm considering, then I would love for you to become a member of this channel. When you become a member, you get access to a level of detail and transparency that most financial content creators simply do not share. This is also something dedicated to what I call the Black Swan events. Right? Essentially something that almost nobody sees coming. We are talking about risk management, understanding what is actually going on. All right, let's get back to the chart. because this is where it really gets interesting. So I'm going to walk you through it like like I've been trading for years. But basically, the type of chart we're looking at is what is called a candlestick chart. We've seen a few of those by now, but that might sound fancy, but the concept is incredibly simple. Every single candle on this chart represents a period of time. In this case, it appears to be a short time frame given how compressed the move is. Each candle shows up for things: where the price started, where it's the highest, where it's the lowest, and where it ended up. A green candle simply means the price went up during that time period. A red candle means the price went down. Green, up, red, down. Simple. Now, look at the gold chart on the left of the screen. What do you see? You see a big, powerful cluster of green candles. An almost straight up vertical move. This is what traders call a sharp, impulsive move. It is telling you that buyers completely overwhelmed the sellers. There was almost no hesitation. The price just went up hard and fast. The gold price was sitting at around 5,180 or so at the time of the window, what you see highlighted on the box. So the price was sitting at around 5,000, although it has moved up since then. But 180, we're at 5,251. And it climbed all the way to 5,238. Now it's at 5,252. This is the number you see highlighted in green on the screen, 5,238. Now look at silver. Silver move is even more dramatic in percentage term. Silver went from around 89 to $90 per ounce, all the way up to $92.47. It is now $93.20. And if you can see the right side, 92, this is the current price at the time of the screenshot was taken. Now, there is something important. I want you to notice, silver had a sharp percentage move that is higher than gold. Gold went up 1.3%, which is still correct right now. And silver went up 3.82%. Now it's up 5.67%. So silver almost tripled the percentage gain on gold. Why does this matter? Because silver is a smaller market. It has less total capital flowing through compared to gold. So when the money rushes in, silver moves faster and harder. Think of it like a small boat versus a large ship. A wave hits a small boat much more dramatically than it hits a massive ocean liner. That is why a lot of investors who want more upside exposure to precious metals keep a portion of their position in silver. The trade-off is that silver also falls harder when markets turn around. Higher upside, higher downside. This is the deal with silver. Now, let's talk about the boxes drawn on the chart. You see that while the white rectangle around the big move in gold and one around the big move in silver, those boxes are highlighting the 3-hour time window where all of this action took place. It is basically saying, hey, look at this window. Look at what happened in just this short stretch of time. On the gold chart, the box shows you a move that went from somewhere around 5,180 up to the top of the chart near 5,255. And if you can also see, after the big spike, there was a small pullback. That pullback is completely normal. When a market spikes that fast, some traders take profits. And the price breaches a little before potentially continuing. The labels on the chart, plus 470 billion, 70 billion in 3 hours for gold, plus 190 billion in 3 hours for silver, those two are the total market cap additions. Note that the price increase itself, but the dollar value added to the entire gold-silver markets globally. These are massive numbers. These are numbers that tell you this was not just nose. Big, serious capital move here. So, what is the big picture? What is going on? Well, let's zoom out for a second, because understanding the chart is one thing, but understand why this is happening and whether this is a short-term spike or the beginning of something bigger. That is where the real money is made. The US-Iran situation has been simmering for a long time. That is not new, but escalations, real serious escalations, have a way of catching markets off guard. And when markets get caught off guard, they move fast. That is exactly what we saw today. Now, here's a question everyone should be asking. Is this a one-day event, or is this the start of a bigger trend? The honest answer is we do not know for certain. Nobody does, but anyone who tells you they know for certain is lying to you. What we can do is look at the evidence, look at the historical patterns, and make a probability-based assessment. Historically, geopolitical conflict has a mixed record when it comes to sustained gold rallies. Short, sharp spikes are common. You get the fear, the money floods in, and then if the situation de-escalates or the market gets used of the tension, gold can give back some of those gains. But, and this is a big but, we are not just dealing with geopolitical tension right now. We are also dealing with a broader macro environment that is already favorable for gold and silver. Interest rates remain elevated, but there is growing discussions about what cuts might come. Debt levels globally are at historical highs. The dollar has faced periods of weakness. Inflation, while it has come down from its peak, has not been completely tamed. All of these factors create a fundamentally supportive backdrop for gold and silver, even without a geopolitical catalyst. The geopolitical catalyst is just jet fuel on an already burning fire. This is what some people would call a Black Swan setup, where multiple risk factors are converging simultaneously, and the potential for a surprise massive move is much higher than most people currently believe. You know the book having to do with Black Swan. It tries you to see where the fragility in the system is before the break happens. So what does this mean for your portfolio? First, if you have no exposure to gold or silver at all, a day like today is a reminder why many long-term investors consider a small allocation to precious metals as part of a diversified portfolio. We're not talking about going all in, we're talking about having some insurance. Think of it like this: you have a car insurance not because you plan to crash your car, but because if something unexpected happens. Gold and silver serve a similar function in the portfolio. They tend to go up when other things go down, specifically in crisis scenarios. They are not perfect, but historically they have done that job pretty well. Second, if you already have a position in gold or silver, a day like today should feel validating, but I would caution you against making any rash decisions based on a single 3-hour spike. Markets breathe. Prices pull back, and if your original thesis was long-term, meaning you believe in gold or silver over a 1 to 3 5-year horizon, one 3-hour spike should not change your strategy. Stay in your lane. Third, for those of you who are more active traders, watching silver closely over the next few sessions could be interesting, given its sharper percentage move and its tendency to exhibit more volatility. And that's exactly what I do with my members. Every day, we talk about silver, talk about Bitcoin, talk about gold, talk about interest rates, talk about certain assets, certain stocks, certain ETFs, and see how they move and what moves them. But again, manage your risk. Never put in more than you're okay with losing. And fourth, pay attention to the news flow around the US-Iran over the next few days. If the situation escalates further, precious metal could push even higher. And if there is de-escalation or diplomatic development, you could see a sharp reversal. Being informed about what is driving the move is just as important as understanding the chart itself. But obviously, don't react. Prevent. Pre-think. Risk manage the process. In terms of my personal portfolio, and this is something I go deeper for my channel members, I've had position in gold for some time now, and I've been slowly building a silver position as well. Not changing my strategy today because of the spike. I'm just watching it closely because moves like this often precedes bigger structural shifts. Every major geopolitical crisis in modern history has had a corresponding spike in gold. During the Gulf War, in the early 90s, gold moved. After 9/11, gold moved. During the 2000 financial crisis, gold did not just move, it went on a multi-year bull run that eventually peaked around $1,800 per ounce during COVID. Each time people said the same thing. They said it was a temporary spike. They said it would reverse and sometimes they were right. In short term, gold did pull back, but in the medium and long term, gold consistently performed at the store of value. Right? The Black Swan concept, and again, is essentially the idea that the most impactful events in history are the ones we do not see coming. The one that felt impossible until they happen. And once they happen, everybody in eyesight goes, oh yeah, of course it would have. Of course this was going to happen. We are living in a moment right now where there are multiple potential Black Swan events stacked on top of each other. Geopolitical conflict, debt crisis in multiple major economies, currency instability, artificial intelligence reshaping industries faster than policy can keep up. Right now, I had a call this morning with a blockchain crypto firm looking to hire people. And basically what they tell me is they're looking not so much for skills anymore because AI is replacing lots of skills. They're looking for people that have the ability to use AI to develop new skill sets. Climate events is disrupting supply chains. I am not saying that the world is ending. I'm just saying that the probability of a significant unexpected shock hitting markets is higher than it has been in a long time. And that environment, having some exposure to assets that have historically protected wealth during chaos, is not paranoia, it is prudence. So today, we watch a huge move in gold. And it is a crystal clear reminder that geopolitical risk is alive and markets react to it hard and faster. We looked at the candles chart. The takeaway is simple. Stay informed, stay diversified, manage your risk, and pay attention. It doesn't mean buy gold now because it's going up. I don't know. Maybe that move is over by Monday morning, or maybe this weekend, boom, they're going at it. After all, the U.S. is quite invested in Iran. And when I was covering geopolitics, I looked into great details about the conflict. And I will tell you that this is just more complicated than throwing bombs on Israel. That's not because that's never going to happen. But these people are making a huge amount of money by building the bomb and everything else. They're enriching themselves. And what the U.S. want, they want to take that away from them. Then there's nothing left. We have nothing to lose. At the end of the day, you're asking for too much. But at the same time, do you really think that those two ships are going to go home? Right? Those airplane carriers, they're just going to turn around and go back? That's not going to happen if you know anything about this administration. So this is going to come to a very bad ending.